Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, while it's been a risk-off on global equity markets for a couple of weeks, Gary Glover from Novus Capital notes that the local market has held up remarkably well. He says while there might be a little bit of more weakness ahead, ultimately thinks it can rally higher into August. This is how he saw the ASX 200 prior to Donald Trump's announcement of a ceasefire in the Middle East.
Ultimately, I think we can rally higher into August and maybe rally higher into the end of the year. But August is probably the short-term target there. I think a little bit higher here. Not so much the key levels there, because I do think you have seen in the past there where you flash to a new high, the market will try and break back, and you will get a bit of volatility after you've reached a new high. So yes, I think so far. I mean, we've pulled back here about 7 or 8 days from the high there, and really haven't had that much of a move here. So again, I'm not sort of seeing any aggressive selling there. I mean, look, the index is showing a little bit of volume there last week, but still think it's pretty constructive overall. So not unusual to get a bit of volatility around the high, but I think if it holds here in the next couple of weeks, I think it can push on till up to August.
Uranium stocks have been on a tear of late, but they have proved to be very volatile. As a potentially safer way to play the space, David Novak from Wealthwise Education and Michael Gable from Fairmont Equities consider global exposure in the form of the uranium ETF URNM.
If you want to play this space, it's a buy and or a hold, but it's a buy. If looking at that chart, it's broken that downtrend line since November or December 24, so over a year ago, and it's broken above and looks good on the chart. So that's a major break of that downtrend line. So to me, yeah, this is a buy.
So yes, it's a buy. Don't worry about trying to get it 5 cents cheaper or whatever. So this ETF, 30% of it's in the top 2 producers, Kazatomprom and Cameco. About 5.5% in Boss. You've got some deep yellow. So yeah, look, it's a sector that I think's just starting to get moving now. I could spend all day talking about it, but it's now starting to move. It's a buy. I think if you're not interested in the ETF and you want a bit more excitement, then yes, Boss and Paladin being the 2 producers in Australia, and also being heavily shorted. About Paladin's about 15% still, and Boss is about 18%, and they're getting covered, and that'll drive the share price higher.
Let's stay with commodities, and while the gold price has shown spectacular appreciation this year, it has more recently shown signs of running out of puff. As another potential defensive play in precious metals, Jonathan Takadina looks to silver with a focus on an Australian mineral exploration and development company operating in Chile.
So the deposit's actually in Chile, and in similar vein, it's an actual existing mine that got decommissioned because they couldn't find the grades. What we now have is management came in, bought it out, and I think they only paid roughly about $10 million for it right at the beginning, maybe a couple of years back. And you've got a couple of experienced operators there, and what their plan is to not just turn it back into production, but actually use modern techniques, do a lot of drilling, do a lot of scoping to get that base out there before you even start to think about returning it to an actual mine. So currently, it's only about a 214 million market cap, trading around $1.10. I actually wrecked this as one of my Christmas picks in 24, around 90 cents. So what you see there, it trades in a big sideways range, but if you zoom out and have a think about that Adriatic chart, it roughly does the same thing. So anytime that one of the easier ways to actually trade this is you have it like a trading parcel and like a longer hold parcel. Whenever the stock pulls back, you add up and buy a trading parcel, and whenever it flicks out and there's some good news there, flick out that trading parcel. But you always want to have a long-term hold in here, because I do think that this will turn back into a large type mine and be a larger market cap, well past the 200 million market cap where we are sitting at the moment.
And that is it for this week's edition of The Chance to Watch. Join us for more technical talk next week. Happy trading.